Hello everyone, welcome back to the channel. In this video, I am going to solve 2018 examination problem which is related to income from house property. So let's solve the problem. Okay, see the problem. From the following information, compute net annual value of house property of Mr. Ganesh for the assessment year 2018 and 19. Fair rental value rupees 1,80,000 per annum. Standard rent 1,62,000 per annum. Rent received 16,500 per month. Unrealized rent for the year 2017-18 24,750. Loss due to vacancy rupees 16,500. Municipal tax paid by the owner rupees 21,600, being 10% of municipal value. So in this problem we have to identify net annual value, and in this problem they didn't give municipal value but they given indirectly. So municipal tax paid by the owner rupees 21,600, being 10% of municipal value. For 10%, 21,600 means for 100% how much we have to identify. Okay, in this problem also we have to identify net annual value. To identify that, first we have to identify gross annual value. So computation of gross annual value, particulars, amount. So according to format, step number 1, municipal value or fair value, whichever is higher. Municipal value. So in this problem, municipal value did not give directly, they given indirectly. So see the last sentence of the problem. Municipal tax paid by the owner rupees 21,600, being 10% of municipal value. So we have to identify municipal value. So 21,600 for 10% means for 100% how much we have to identify. For 100%, if you multiply, you will get municipal value 2,16,000, or fair value. Fair value given in the problem 1,80,000. In this, whichever is higher. So in this, whichever is higher, whichever is higher. In these two amounts, higher amount is 2,16,000. This will be a notional rent. Step number 2, notional rent or standard rent. Notional rent 2,16,000. Standard rent given in the problem 1,62,000. This whichever is lower. Whichever is lower. So in these two amount, lower amount is 1,62,000. This will be a expected rent. Step number 3, expected rent or actual rent. Expected rent we know already 1,62,000. Actual rent we have to identify. So the given actual rent we have to identify. For that formula we have annual rent minus unrealized rent. So annual rent we have to identify. So for for 1 month 16,500 they're paying. So 16,500 into 12, you'll get annual rent 1,98,000 will be your annual rent. So annual rent minus unrealized rent 1,98,000 minus annual rent 1,98,000, unrealized rent given in the problem 24,750. 24,750. If you deduct, you will get 1,73,250. In these two, whichever is higher. Whichever is higher. So in these two amount, higher amount is 1,73,250. Less loss due to vacancy. So loss amount also they given 16,500. If you deduct, you will get 1,56,750. This will be your gross annual value. Gross annual value. So what we have to identify? We have to identify net annual value. So net annual value is equal to gross annual value minus municipal tax paid. Municipal tax paid by the owner. So gross annual value we know already 1,56,750 minus municipal tax paid by the owner 21,600. So you'll get 1,35,100 will be your net annual